Recording in progress.
Good evening. This is the Eye of the Storm podcast with the weekly technical picture for the NASDAQ 100 being recorded on Friday evening, May the 10th, 2024. And again, I am recording on Friday evening because my Thinkorswim account is being transferred over to Schwab as a part of that takeover starting tonight, and I won't have my screens back until Monday morning. So I thought I better get this done. So here I am on the NASDAQ 100. It was an interesting week in that if I based it on what we talked about last weekend, the markets did move higher convincingly and with some speed. And so that was kind of what I had in line due to how the cycles were beginning to form up. And so a lot of downside pressure was going to be coming via, we had a 3-month and I believe a 1-month and a 3-month cycle beginning to turn and then collectively be looking for a trough. And that initially did pull some downside support in for the cycles to bottom, but we were looking for the end of April, and we kind of came in April the 19th. And so now we're looking that we have again end of the month, so end of May into June, and then again we have more, but that's out in towards September. So we've got some cycles that continue to suggest a really pull in one direction once any downside is relieved from the shorter term cycles, because ultimately sitting above everything as we have the 4-year presidential cycle. And of course, that one's in full swing. And so we shall see how this all works out cycle-wise. But the 1 month and the 3-month are very regular. And the 1 month can, it can flow from being 29 days, 28 days, 31 to 33 days. So a little bit either side is always allowable on the regularity of these cycles and how they come in. Now, so we have those that are actually pointing to a little collectively pointing to a trough, a cycle trough, so cycle low in the late May, beginning of June timeframe. So, and again, what we got going on is we have Friday's expiration. That's a monthly. The May monthly expiration is May the 17th. That's on Friday. We are dealing with call walls here in the NDX and in the NASDAQ, like we are in the S&P, not as dominant. They are more in the Qs. I will say the Qs can be a little bit stronger, 445, 450. We got 465. We have different levels in the Qs, which could do nothing more than just provide some resistance. I mean, if the rally is strong enough and it's going to break through the call wall, then it breaks through that resistance. The same way we look at certain Fibonacci levels as being resistance, or a price level as being resistance, because that's where it has formed, that's where it has stopped, that's where it's acted before. So that would be the same deal when we talk about a call wall or a put wall. It's like, it's a wall. It's where there's a bunch of short positions sitting. And if you break it, it's going to really upset the apple cart of all those shorts. So not that that matters, but it should give you some insight into what you can expect should it break. Should we get a significant break that kind of knocks down the wall, you're going to see the scramble to go to cover all of these positions. Sort of like, when we have gamma squeezes, same deal. They're racing to get out in front of an advancing avalanche, so to speak. Okay. Over in the NDX, in this cash market, we're looking at the daily. The bigger picture truly remains the same for me. But again, as I mentioned in the SPX or in the S&P 500, there is an alternate and it's sitting out on the edge. And it would suggest that this ABC that we had off of the all-time highs, which again, in this market, I believe we're in November of 2021, and then secondary in January of 2022. That from that high to this low, I'm marking as primary wave A. the alternate that's been sitting there, it's been looking, I've not ignored it, I'm just following what I'm doing. It would suggest that this not primary wave A, but it's a primary wave 4. And that would then suggest that we're in a primary wave 5 up. And again, we are getting new all-time highs above what was existing. We've done it several times. We're continuing to push as we head up towards the irregular fib number, right, which is 1.382, and that sits at 19,180. Do I think that that's going to be achieved? I do. Within the minor fifth wave, which is currently underway, I do think that that level, in fact, it sits square in the middle of the whole cluster of resistance that I think could complete this primary B wave or point the way. Either way, folks, even if we still have got a little bit stronger of a run higher, it's still going to be finishing. It's finishing. Whether you want to look at this as a bull market or a counter trend market, however, it is a finishing move. I'm not saying move into cash. I'm not saying get long. I am, as a trader, trading every day. If you're a trader and you have the ability to move in and out of the market and you have the access, then yeah, this is an up move and you should trade it. If you're a position trader or if you're trading via giving orders to an ETF or just putting your own orders in about moving money from cash into the market and back out into cash, well, if you're sitting in cash, I don't, and yeah, these are decisions we make as individuals, and I don't think that I am not recommending anything. I am saying there is still upside to be completed before either a continuation of a cycle fourth wave correction comes through with a primary C wave down to market's completion point, or we begin a much larger cycle degree, likely fourth wave, once this primary fifth wave up is complete, which would then likely complete the cycle degree, third wave. So, that's what really I'm kind of seeing. Not that this is new, not that, but it would suggest, now don't get me wrong, it would suggest, we have the fibs, we keep giving the fibs, and those fibs continue to suggest, yeah, technically, yeah, these levels can be reached. Now, if you need to mix that and put it together with a fundamental picture, you might have a problem on saying, how's it going to get up there? Unless we got this, unless we get this, unless this falls in place, unless all of these things happen. And I can't tell you whether they will or they won't happen. I may have an opinion on them, but I'm living in today, and today's kind of saying a lot of it could teeter on what's happening in the Middle East, what's happening in Russia and the Ukraine, what's happening with the Fed, what's happening with the amount of money that is still swirling around producing inflation. What's happening with all of those different fronts, and how will that affect how I invest in the market? It's going to really be counting on a lot of how these things affect these companies. And there's a lot of changes going into place, very similar, folks, to in the early 80s, we had the start of the computer. And that took over doing a lot of everything. And so that just really started to fuel the technology, started to fuel a humongous rally that had its interruptions, by far had its interruptions. We had the great financial collapse. We had the NASDAQ itself, the dot-com bust. That was all within this ongoing larger bull market. So, but they all fit in the overall count. Now, I'm thinking that a lot of that phase was done back in 21, 22, and that what we're working on now is the counter trend rally, and we still have a correction down, and that then will complete this larger cycle 4 correction and then set the stage for a cycle 5th wave economic explosion. But I think first we've got a lot of mending and forming and just cleaning up a lot of messes so that that 5th wave, when it strikes and comes about, it's going to do it in true strength. Strength from the currency, strength from the government, strength from the situation, strength from interest rates, strength from how the economic systems are working, not strength from just a group of stocks, a group of, or a sector called artificial intelligence. That's starting to fuel it, no doubt, but it's not been really defined. It's not been really reformed. It's not been really refined. There's still a lot of open questions, and that could just really put kinks in this whole thing. So I'm looking for all of this to be resolved via a correction, a readjustment, and then to begin anew with clean slates and go. So how and where are we now? I'm on the daily chart. Let me bring this back in. So there's the A, and we're in the primary B. Within it, there's a wave A, B, and we're in the C wave up, which is 5 waves of minor degree. 1, 2, 3, and 4 are done. Let's open up and take a look at, we have 3 and then 4. Why is that coming in so bizarre? There you go. There's 3 and there's 4. And so if this was April the 19th, so that's just a month ago, a month on the monthly expiration. And what a great expiration it was. And it came flying down enough that I really felt that that could have been the completion point for the primary B wave. And then we were working on putting in 5 waves down. We only got 1, 2, and 3. And then we got this. So obviously, you had the 2 waves running, or the 2 count running, until 1 took over, and that was the minor 4th wave. We're in the minor 5th wave, and here we are. Now you can see how it's following through exactly as it should. But I had to wait for it to really make it clear that it wasn't going to drop anymore, because I'll tell you here, we were all on board for that downside. And then suddenly it stopped, and then it still was like, okay, what could it be? Well, it could be an ABC, and we're going to drop again anyway. Then we did. And then it came, and then it gapped, and that was that. So we had to go with this, and we're looking for upside. Again, depending on how you trade and what you trade and what your ability to trade is, yeah, you may have taken a hit here and there, but there were adjustments to be made, and just to go with it and to put on positions that reflected maybe your goals, maybe your style of trading. If your style of trading is you're an option trader, you're always going to be looking to deal with premium, and you want to be a premium seller. That's how I shouldn't say it that way. As a market maker standing on a trading floor, that is how we made our money. And there are ways to put on premium short positions and still be beneficial from an upside move. And then there's the futures market. There are all kinds of things. Into the detail on the technical side. Right now, the minor 5th wave have 0.618 resistance was touched today. Now, basis the cash market, the high was 18,247.61, and this was 18,247.63. You couldn't get any closer. It got within 2 cents. It hit it on the head today, or in the nose today, and then started to come back. Now, that just makes it a little bit easier for me to go my minuet wave 1, minuet 2, minuet 3 of minute 3. We put in a minute 4. Let's take a look at what those fibs are going to look like. And so we're just going to put them in. And so basically 0.236 to 0.382 would be the levels that I'm going to look for right now, and that's on our daily chart. And the do not cross is going to be actually this one right here, which is actually just below 382. So the fact that this kind of gapped and we had that pretty much higher high there, and I've marked it as 1, wave 4 can't break it. And I really wouldn't be looking for that strong of a decline. Not to say that it can't happen, but it would be something different. And it would be within this whole thing. Having said that, so right now, I think we get a little bit of a pullback, 17,990. 93, 94, all in there. That could work. Again, it has to be a little ABC, and that's the daily. Let me bring it down to the 4-hour, and it just opens it up just a little bit more so we can kind of see how it is kind of coming down. So we got the 1, 2, 1, 2, 3. Looking for the 4, go back up for the 5. Now, let's start filling in some of the blanks, because this is just for the minor 5. Where could this minute wave 3 come up to? We're going to measure here to here to here. Yeah, come on. There you go. So 1.618 is 18,272. And let me go up there. First, let me take this off. So we're looking at upside. I don't need all that in there. So, but we've already surpassed those. So those are done. And we're looking at 1.618 and 2.618 actually. So here we have 1.618, and that would be wave 4 down, wave 5 up. We don't get too much past 18,272. And then once that fourth wave is in, then I can add one more, and I'm fairly certain that it likely is going to be above all of this. And let me just go one more time and put this in, and I'll show you. I'll even throw one up and then take this back out. If we do get a wave 4 and it comes down to here, then I'm going to be putting in these fibs, and we're just going to mark it as if that it comes down to 18,221 right there. And so you can see 618 is 18,421. Equality is 18,669. Ultimately, we would like to see it come above right here, which is 18,471. So this would not cut it, but that's okay because it'd only be minute 3. We pull back in a minute wave 4 and we get a minute wave 5, and that would then be expected to take out that high. But I think it could happen in wave 3. And so we get above there, we start heading up to here, and that would put in another all-time high, but still below the 1.382, which is for the primary B wave, the irregular B wave. So that's always been in the picture. But what I always talk about is that what takes precedence will be the structure itself. So whether we actually get to that or we come in short, but not by much, then it still is going to be an irregular, because both counts, both fib levels, that's 1.236 and 1.382, become valid, or they're in play. 1.236 was already taken out, so that's why it's been removed. And now we're looking at this one. So here is, that would be for if we get all the way down to that level, 18,021, then we have the potential. First, 18,421, which could be just minute 3, then a 4, and then a 5. Or if we go within this fifth wave to equality, then we're looking at 18,669, which is a new all-time high for the cash market. And then if we look at, which we will here in the futures market, will be above 18,709, which is the futures current all-time high. So the moving averages on the 4-hour chart, all looking very good right now. Even see they're all kind of moving in the same direction, and they're kind of bending a little bit because we got a little downside going. And then likely we'll start to go flat, particularly the 13 and the 20. The 13, they may get broken, but I'm not looking for anything too severe there. Once that low is in, I will then, of course, put the balance that shows those upper levels, and they'll be more accurate. So, but right now, that's kind of just the guesstimate. Moving averages, again, all in place, falling in the right direction for continuation higher. Ultimately, there's our zone. There is our resistance zone, our cluster. And that would be for minute wave 3. That could peak, it could really peak out pretty high. I'm not looking for that. I'm looking for somewhere up in here. But here, minor wave 5 would be equal to minor wave 1 at 19,034. Just above, we have that primary B wave. So minor 5 would then complete intermediate wave C primary wave B. So that works and is in the territory that has not been exceeded yet, which is 1.382. So that's all still remaining in line. If we drop into a much more bullish picture, much more bullish for the short term, which would suggest we do take a flying leap for these higher levels. This is the C wave. So still, we got a lot going on. 1.618 for minor wave 5 comes into 20,308. These numbers exist technically. Everything else still has to match up to get them up there. But there's enough money flowing in all these markets to do it. That's my other point. The money is still there and it's still being flung around. Okay, over in the futures market, this is the beast that I trade each and every day. And most days, you're able to catch enough where you can make a decent P&L, a decent profit. You can do that every day. Your monthlies are going to look good. And then suddenly it becomes your salary. And that's always a good thing. For those that still, I know there's a lot of people that would like to make that choice and they're still determined to do it. It's not easy, but persistence and then actually just knowledge and mindset. I think mindset is extremely important. I bring it up now because it just kind of came into my mind, but I want to state, because I usually forget by the end, I do have a trade room, and I run that trade room together with Sasha Goring. He is my partner within the trade room, and we share the analysis duties. Sasha's also has a large picture account and different than mine, but our intraday we are pretty much the same. And Sasha gets much more detailed on the with a lot of the fibs, and he always is there. And I'm telling you, I always go, Sasha, what's your level? Because they're good, and the market plays to them often. And it's not because it's Sasha, it's because it's the fibs that a lot of people are using. And so as long as we can follow those, we usually are getting in on some of the really great trades. So that trade room is available and it is there. And both Sasha and I also offer coaching. So there are some tools, there are some things available. If you have an interest, you can always email me or leave a comment and then I will get in touch with you. Or you can check us out on www.logicalsignals.trading. So it's logicalsignals-trading.com. So once again, for the trade room, if you have an interest, go to www.logicalsignals-trading.com and you will find the trade room tab. You go there and that shows you what the cost is and it gives you the ability to join. I only do it month by month, so there's no commitment beyond that. And again, my goal is to earn at least the price of the trade room each day. All right, back here in this future, again, there's fourth wave. We're in the fifth wave coming up. It's a minor degree. It's going to consist of 5 waves of minute degree, of which we have 1, 2, and we're looking to finish this third. Now here, this gets a little sticky for me. Now we went up here, but we came back down. And if I'm doing this, I'm going to have to bring this down to the 1-hour chart so I can show you inside this thing. If I'm counting this 1 and this is 4, this starts to get a little sticky. What in God's name is all of this? And it gets a little bit hard because this would be 1. If this is 4, right? A, B, C, 4, and then this is 1, 2, and then 1, 2, and then 1, 2, and then da. Like that's a little tiny diagonal right up to that point, and a little tiny failure or an equality. And so I'm finding it very difficult. I'm leaving it right now, but I'm saying that we have to look at the possibility that it's ABC A of 4, A, B, C, and a really tacky C wave up to, substantially above that minuet wave 3 high. But see that number, 1.382? Look where it came to, just above it, rejected and came down. So that would be for this irregular B wave, right? A, B, C. So we got to leave open the potential that we can come down to 18,034. What's that going to do? Whew, it's okay. It would be okay because there's wave one, 17,943. Right? This is the futures market.